Why is the market at near all-time highs? Is it about to fall yet again? Are we getting euphoric as we did in late January, early February? And what does all of that mean for your pension anyway and for your investments? And does it mean you should give it to an expert or try and do it yourself? Well, here are some answers which are not the ones you're expecting to hear. First of all, if you've got a portfolio which should always be personal and bespoke to you, then in a way, none of what I've said actually matters. Take the Warren Buffett approach. The man's calm because he knows he's got a portfolio bespoke to him and obviously suitable for the vast majority of his investors. Put another way, your job isn't to try and pick the peaks and the troughs or gamble on the news and think today I've got to buy, tomorrow I've got to sell. You can do that if you wish. It's called speculating gambling, and you're welcome to do that through the stock market. Equally, if like me, you exited around March time, not at the peak, off the peak, knowing that you might well buy back in more expensive, then that's an insurance premium you were happy to pay, and you were happy to be out wishing you were in than in wishing you were out. In fact, you were probably very happy in February and March and April as the market fell and tanked, thinking, thank God I'm missing all of this. Equally, if you got in belatedly, as my wife and son did around April come May time, you got in belatedly, it was actually May time, knowing that had you stayed in, or if you had some miracle power to pick bottoms and tops, you would have done better, then you too are happy because you knew that, of course, there's a price to pay of not being able to see into the future, and you minimize rather your regret. You had regret aversion. And that's a far better way, and you slept easier. Making investing bespoke to you. And sadly, that's not what wealth managers, IFAs, and fund managers do. They pretend to do it, but they don't actually make it bespoke to you that you can sleep easy at night. Their answer is always spray and pray into a bunch of funds we've also given to a bunch of other people, and don't bother us for a few years. It'll all turn out well, because it usually does. It's not the right answer. You probably want to try and eke out more returns than that. So, whichever category you are in, your job is to be able to look back and say, well, I did what was right for me. Not, I rolled the dice, I gambled, and I didn't manage to call the tops and bottoms and didn't maximize the hypothetical return. So contrary to what people might think, having master's degrees in politics and economics doesn't give